Hey everyone, giving you a salute. It's your favorite investing VTuber back to you now with a video, this time a reaction video to a video by Graham Stephan, my $5 million investment that makes $550 per day. We're going to be reacting to this video and reacting to his stock portfolio. And while watching this video, I'll be giving my thoughts and my experiences from 10 years investing in the stock market. So let's take a look.
What's up, you Graham? It's Guys here. So let's finally talk about one of the most requested topics here in the channel, and that would be a complete breakdown of my $5 million stock market portfolio.
He's zooming really fast, so you can actually see all of his tickers in this video. He doesn't talk about all of them, but if you look at some of these categories here, it looks like that's the number of shares there on the left. That could be the share price you got in at. That should be interesting for seeing the rest of the video. What's interesting too is you notice he doesn't talk about this in the video. Yield 10 Bioscience Incorporated. So our boy Graham, he's in a little bit of that biotech like yours truly, Eugene. He's in biotech just like me. That's interesting. Norwegian Cruise Line, Cloudflare. Interesting. There's a lot of normal stocks on here and there's a lot of crazy ones too. Let's take a look at Yield 10 Bioscience. I'm actually kind of interested in what that's about. So it looks like he's invested in a company that's working with agricultural science. So I was wrong calling it biotech, at least in the traditional sense. It looks like it's looking for new technologies for improvements in crop yields and food security. It looks like they're trying to optimize the flow of carbon in living systems. So this is a very common thing you see in YouTuber investing portfolios. They're really into alternative energy. They're really into green energy. Pretty much everything that's downstream of carbon emissions. It's interesting that this company, like the other ones he talks about, like Enphase Energy, for example, are in that whole green energy milieu. Graham Stephan's portfolio, just based on what I've seen now, even initially, it looks like he stands to lose from a rebound in oil and traditional fossil fuel energy.
See, over the last year, I've just been consistently investing nearly all of my money into the stock market, and until now, I've never publicly shared exactly what I'm buying and why. Part of this was...
So that's interesting. He says here in the video, and this is true, I look back onto his previous videos, the last time he was talking about the stock market per se was with Kevin O'Leary. And you can see here from this video on September 4th, 2020, he only had $1 million in the stock market. And that probably was the amount of money he deployed during the pullback from the coronavirus pandemic. He decided he finally was going to invest in the stock market when the coronavirus recession hit. And I'll tell you, I know someone who wasn't interested in investing at all throughout all the 2010s, but essentially his plan was, I don't know a lot about stocks, but when the next big pullback hits, that's the time I'm going to get into it. I'm not going to invest in when the market is normal. And I have to admit, it did really well for this person I know. And it looks like Graham was the same. It looks like Graham was only really into real estate throughout the 2010s, and then finally got into stocks after the coronavirus pandemic hit. Looks like he did very well in that environment.
Prior to this last year, what I was doing in the stock market was not particularly exciting. I was just buying the same index funds over and over again, and a video about,
hey guys, just bought more BT-SEX, time in the market beats timing the market,
isn't as exciting as watching someone like me, Kevin, plow $500,000 into Peloton stock because he believes that gyms and hotels will soon be upgrading their equipment. But today, I guess...
This is a very good point, and this is something I run into on my channel a lot. It's that there's a difference between being a good investor in your portfolio privately and being an interesting YouTuber, right? So in order to be an interesting investor on YouTube, you need to be talking about all the current hype stocks. You know, frankly, in my opinion, I don't think they're good investments. I just don't think so. Generally, it's better to be invested in index funds, at least in terms of overall performance over decades, but that just doesn't make good YouTube content. And so you see a lot of channels falling into this trap where they're thinking, man, other channels are interesting. They're in these meme stocks, they're getting views, so I guess I got to put my money into it. Same thing with me too. If I want to be able to talk about a stock, frankly, in order to feel the right amount of emotional involvement to accurately model and accurately educate people about that stock, I feel like I have to own it, even though it's not the kind of investment I would own normally. So it looks like he finally bit the bullet and stopped just straight up ETF investing, and he got involved in a lot of individual stocks, which actually is something I recommend on this channel, right? So what I advocate on for this channel, what I educate people about, is researching, learning, reading, and then gaining a mastery, a total mastery in a specific individual sector of stocks. So for example, there's a portfolio I reviewed on this channel just before from somebody who focuses entirely in niche commodities, and that did very well for him. On my channel, I like to focus on biotech pharmaceuticals and specifically these days gene therapies. Looks like Graham's finally dipping his toes into individual stock investing, and by the looks of it, specifically on green energy, energy alternatives, and then environmental friendly stocks. And you know, that is a good place to be in, but there's a lot of people competing for it. It's pretty much a consensus investment that green energy, electric vehicles, etc., that's the consensus. People think it's a good place to be in. So we'll have to see how that turns out over the next 10 years.
So with that said, here's a complete breakdown of my entire stock market portfolio, so that way you could see my biggest winners, my worst losers, my biggest positions, and my riskiest positions. Alright, so I'm not exactly sure how we should best break this down because this particular account was crafted around almost the bottom of the market in March and April of 2020. At the time,
like I said, I know somebody before who did zero stock market investing. Then right in April, they decided to get into it. And yeah, it did very, very well for them. You can actually see that portfolio in the previous video. I'll link it. One thing that's said though, and I think in terms of educational opportunities, there's definitely a difference between a portfolio that's been around for 10 years and one that just started at the very, very bottom of a recession. So in terms of educating brand new investors, just keep in mind that Graham's portfolio is not representative of what your normal stock experience probably will be, right? So recession entry point opportunities come like once every 5 to 10 years.
I was sitting on a decent amount of cash while I was waiting to find a good deal in real estate, but then when the entire market started tanking, I saw that as a good time to start buying up companies which I felt were oversold while the entire market was crashing. So
pretty much everything was oversold when the stock market was crashing after the coronavirus pandemic. I think a lot of people knew the Fed bailout was coming, and yeah, there were some good deals. Pretty much everything was on sale, and he was lucky that he had so much cash waiting at the time. That said, though, if he was one of these guys that was holding on cash for years waiting for a correction, you would have missed out on a lot of opportunities on the stock market. I know some people who are convinced that a recession was coming every year since 2014. He said he was holding that cash waiting to buy another property, right? So there's a trade-off, because now we know, or now we can assume, that because he put all his money in the stock market, he probably had to cancel a future house buy. So there's always a trade-off.
Start this one off with the stocks that saw the highest return from this account. The first one would be Plug Power, which is up almost 220%, and I have 1,000 shares.
So let's take a look. Okay, so here we finally have the first static view of his entire portfolio. So it looks like he only put $10,000 in. So for Graham, that's a relatively small commitment. And it's funny that is his biggest gainer there. Market value is only $32,000.
At the time, this for me was a bit more of a speculative play, so I didn't want to go too heavy on this in the event it didn't work out. But Plug was a solid company that I wanted to invest in because they were involved in hydrogen cell technology. This one is certainly a bit riskier because hydrogen power might not be widely adopted like battery power is, and it's a challenging path to success. But a year ago, I felt like this was worth the risk, and still today, I'm holding on to it.
So with Plug, again, this is what I was saying before. Graham's made some good picks in the stock market, you can see, but he has that mainstream investor consensus that green energy or bust, right? Alternative energy or bust, alternative transportation or bust. And I think there's just a lot of people competing in that space trying to get stock market gains. And there are probably other niche sectors out there that have more opportunities right now. That said, me personally, I actually don't invest too much into green energy or alternative energy. I've seen a lot of videos from Thunderfoot, and I have to agree with him. I'm skeptical on hydrogen power. It's dangerous, right? So with gasoline cars, the good thing about them, and actually electric cars too, the good thing about them is that they're idiot-proof. Hydrogen, you can see it, it's extremely flammable. You can trace so many examples of disasters and problems in the space program from hydrogen cells. So hydrogen does have a very long way to go. The technology actually has been around for a long time. I remember reading about hydrogen cars in Popular Mechanics in the early 2000s. Good on him for getting in there and making that 200% gain. It seems like he genuinely believes in hydrogen. I also think that if you're just investing in general alternative energy, alternative vehicle hype, you can make the same amount of money as well. You can make just as much money guessing what investor sentiment will be versus actually finding winning companies. Look at Dogecoin, for example.
These out there, and that would be the Cheesecake Factory, or the ticker symbol CAKE, and for me that's up almost 170%. Listen, for as long as I could remember, I've been a fan of the Cheesecake Factory. I remember my grandparents taking me there as a kid on special occasions, and the portion sizes were enormous. So now, of course,
they really are enormous. I mean, calorie-wise, Cheesecake Factory is enough calories for 1 or 2 days. It's incredible.
Everything was shut down last year and we're all stuck inside. Macy and I decided to order from the Cheesecake Factory as a date night. And when we got there, we saw that the place was packed. So I decided to invest $32,000 in a company that I like and use myself with the expectation that with that much demand, they're unlikely to go under. Well, since then, that investment has almost tripled, and currently right now, they're paying almost a 2.5% dividend.
So that really is impressive. Again, there's a subscriber portfolio I reviewed on the channel, and he had a very similar strategy to Graham, where he realized that with the coronavirus shutdowns and lockdowns, bigger restaurant chains were going to eat up most of the market share from the mom and pops. And that subscriber made a lot of money betting specifically on, I think it was Blooming Brands and Ruth's Chris. You can see that video. What Graham doesn't talk about, again, is that the reason for Cheesecake Factory's share price appreciation does kind of come at a dark cost where, yeah, it was eating mom and pop restaurant market share. It looks like compared to Ruth and Blooming Brands, actually Cheesecake Factory was the better buy of the three, but all three of them were pretty solid, pretty smart coronavirus lockdown investment ideas. One thing that's interesting too is he says that one of his motivations for investing was that he was buying from Cheesecake Factory. They had a lot of customers, he enjoyed it. That's a strategy a lot of YouTubers talk about, and I actually have to recommend it. So for example, a company I've just fallen in love with recently is Corsair Gaming. And actually, I don't like that company even for the gaming products. I actually have, believe it or not, 3 Stream Decks on my desk. I'm going to be using it for streaming hopefully later. I was just looking at Corsair. I was seeing their brand, their products everywhere, and I realized cottage industry, individual content creation is just exploding. And it's probably going to continue exploding over the next decade. And if you want a good computer capable of editing, if you want the hardware to be a streamer, to be a content creator, you need Corsair products. And so that's why I've invested in that. It looks like Graham had a very similar thought process when it came to Cheesecake Factory.
After that, though, we have the one, the only, the Tesla. Now, this is the second time I bought
Of course.
Tesla, but the first time I bought into the stock, which I'm still holding, that investment is up around 1,150%.
That is insane. I think so many people got Tesla wrong. It's funny, right? Because all the smart people, all the supposed value investors continue to get Tesla wrong. But here you had these YouTubers, and look how much money they made. It really is incredible.
This all started when I bought a Tesla Model 3 back in early 2019, and I just love the car so much that I decided to buy into the stock when it was about $50 post-split with the mindset of, hey, you know what, maybe one day it might end up paying for the sales tax.
So I was driving around in a Tesla Model 3 my friend owned. I think it was in like December 2019, and I have to admit, unfortunately, it took that long. I had to actually be in the car physically. I never actually looked at the company's fundamentals. It took me that long to be in the car physically to realize, oh wait, Tesla's the real deal. These cars are great, they're awesome. That moment I realized, but actually I didn't invest in Tesla just because, again, my thing is gene therapy, my thing is biotech. There were some people, for example, Martin Shkreli is an example, they saw potential in Tesla where others didn't. It's not generating revenue, they don't have any profits, where is this going, why is it worth more than the other car companies? Not realizing that the growth rate was beating all the other car companies out of the water, and just putting a simple calculation where Tesla could potentially get its margins, right, its gross margins on the car sold, at a same level of Ford, it actually predicted the market cap in Tesla we see now. What's interesting about this video in particular, though, is Graham, as far as I know, he sold most of his Tesla shares before the latest surge up in price. So I guess that means he bought back into Tesla. He had a, oh no, this is too high, even for me as a Tesla bull. It looks like he had to chase after the share price afterwards.
Know that investment in Tesla would be enough to pay for the entire car multiple times over within 2 years. But so far in this account, though, I've kept buying in over the last year, and so far that
So it seems like he's been buying Tesla regularly.
Tesla investment is up another 100.
All right, so now let's take a look at some of this information here. His cost basis was $91,000. You can see it right there. $91,000. That is insane. Putting $91,000 into Tesla. You have to really believe in something to do that. Market value, $200,000. It looks like, just based on seeing his portfolio, he's not selling options on it because he wants to keep it. But my man Graham, he can make a ton of money on options if he just sold covered calls against Tesla. I mean, let's just take a look here. So I put Graham's Tesla position into an options calculator. This is very rough, obviously. There's no guarantee he would get this exact amount. But you can see he can make $21,000 a quarter selling Tesla covered calls just on the position he has already. Really incredible if you think about it. He's obviously not doing it because I don't see it in his brokerage or his portfolio, but that really is something. You can see in this list of grayed out stocks, he actually has Ford Motor Company. See that right here? Ford. So is my boy hedging his bets? I don't know. Ford's a more traditional car company, and as far as I can tell, they're not taking the same path Tesla is, that's for sure. And Ford's got a $23,000 position. Really incredible if you think about it. So it looks like, based on what I'm seeing with Cheesecake Factory, Graham was buying in, again, April, May, getting in around $17 to $20 a share. The price of Cheesecake Factory is now $57 a share, so that means on the money Graham invested.
Well, since then, that investment has almost tripled, and currently right now, they're paying almost a 2.5% dividend.
So right there you can see Graham Stephan's yield on cost, right? So what that means is, for the money he actually invested in Cheesecake Factory at that reduced price, Graham Stephan's yield on cost, not the current price, but how much he spent on Cheesecake versus what he's getting in a dividend, is not 2.46%. That's the dividend yield right now, but from when Graham bought it, right, the cost of his stock shares, so his yield on cost is really 6.7%. I mean, that's incredible. He's getting 6.7% dividend. That's like owning a bond or preferred stock, so congratulations to him. He's probably getting really good dividend income from this. I did the math, actually. He's making $2,000 per year from his Cheesecake Factory stock. Meaning, just from buying it at the right time, he's getting a free $184 a month from his Cheesecake dividends. And those are qualified though, so they will be taxed at a better long-term capital gains rate than if it were ordinary dividends. So props on him too for also getting good tax treatment on his Cheesecake Factory dividends.
At this point, I feel like having a few $100,000 in a single stock in one account is probably not the best choice from a diversification standpoint, so I'm not really buying any more right now. But this is something that I'm...
Yeah, Graham, if you want to hedge your bets on Tesla, just sell options contracts against it. I mean, if you're really worried about it, sell puts. For those of you who don't know, a puts contract is essentially a bet that the stock will go down, right? So on his Tesla shares, that gives him downside protection.
And who knows, maybe Cathie Wood's prediction that this might one day hit $3,000 a share
Yeah,
could be true. Oh, and by the way, if you want a chance to get a completely free share of Tesla, feel free to use my link down below.
Yeah, if you want to get $30 when you deposit $100, be sure to go to the link down in the description to M1 Finance if you want to start investing the right way. I've also got a Webull link too, 2 free stocks if you sign up with that.
In the description, and when you sign up for the free stock trading app Public, you'll be getting a free stock worth all the...
It's interesting he's talking about Public. I thought he used to advertise Webull. I wonder why he changed. There might have been some deal behind the scenes. I'm just speculating. I honestly don't know. I do notice, correct me if I'm wrong, but I do notice that he used to talk about Webull. Now he's talking about Public. I've never used Public.com.
the way up to 50.
My feeling is that Public.com is better for beginners. I honestly don't know. I've never used it. I will say Webull is definitely a brokerage for more intermediate to advanced investors. If you're a beginner, I recommend M1 Finance.
Plus, I'm posting all of my stock trades on there, so if you want to be a part of it, I would love to have you join. But then, of course, we have number 4.
I post all my stock trades and my thoughts and my investing research on my Telegram journal, link down in the description. Check that out.
Taiwan Semiconductor Manufacturing.
Interesting. So we got $42,000 in Taiwan Semiconductor. How much did he make on this?
Which is up another 120%.
120%. Good job.
This is the world's largest chip and semiconductor manufacturer, and when everything was shutting down last year and people were shifting over to remote, tech-driven work, I just felt like this one would be a natural choice since I felt digital demand would skyrocket.
Interesting that he's not talking about Zoom. A lot of people were buying that around the time when everything was going digital and online meetings were happening. These are the stocks he still has, by the way. He probably had coronavirus buys and plays, possibly like Zoom, and sold out of them. So we don't know what he actually held at the beginning when this was all starting. But it's interesting that he's still holding these winners.
Plus, since they produce chips for more than 10,000...
I can tell you from my own experience, I was buying, I think, PPE companies, the equipment healthcare workers wear to stay safe when they're treating coronavirus patients. VMD was one I did. That one did very, very well.
1,000 different companies, including Apple. I felt like this would be a great way to diversify within a single company with a lot of growth potential. And then 5th, I probably just got too many to mention that
So it's interesting also, he's very, very lucky. All the semiconductor companies have done insanely well, especially the last month. There's a massive shortage. There's not enough chips to go around. It's actually affecting the gaming industry. Nvidia is downstream of this. They need those base components to make their graphics cards, to make their GPUs, etc. I think Graham's investment thesis was wrong. If you're trying to get exposure to more people being on the computer and more online content creation, online business meetings, companies like Corsair, Zoom, examples like that were probably better plays. I think he got lucky that there was a big supply crunch in semiconductors. That has more to do with his stock doing so well rather than so much, hey, you need chips to be online, therefore people are going to be online. So I think this is an example where you had the right result but the wrong hypothesis.
One of my single biggest holdings in this account is something that I recently purchased, and that would be Walgreens with a
Interesting, Walgreens. Let's hear the reason for that. Walgreens is really consumer facing. He's got $200,000 in Walgreens. I think they pay a dividend too. We should figure that out. If you look at it, he's only up 9.35%. So if I had to guess, this is a recent investment. So I wonder why he's so excited about Walgreens for 2021. Interesting, yeah. So there's a 3.56% dividend on Walgreens. Wow, so that means before tax, he's making $7,400 a year in dividends from Walgreens. That comes out to $618 a month. Yeah, that's incredible.
cost basis of $190,000. This is a company that I felt was a bit beaten down, they were widely overlooked, and they have a really promising future as the vaccine starts rolling out.
I'm not quite sure what he means between Walgreens and the vaccine distribution, but still, it's interesting. One thing that I think people aren't pointing out is that Graham looks like he's somewhat of a dividend investor, if you think about it. First Cheesecake Factory and now this. Graham is raking in those dividends.
Although after that, we have one of my favorite all-time stocks that I have been buying consistently throughout the last year, and that would be Google. Now here's the thing, when it comes to this one, I'm definitely very biased because for those that don't know, Google owns YouTube, so in a sense, Google is kind of like my boss. Plus they have one of the most
Yeah, if you're a YouTuber and you get AdSense revenue, Google's your boss, and that's where most of your income usually comes from. Back in the day, there were always posts on the personal finance subreddit on Reddit. Always there were posts from people saying, hey, you know, I have a bunch of stock in my company that I work for, should I sell? And always the reply from those people was that, well, if your company has a bad year and they fire you, you're going to have a double whammy, right? So your stock is going to go down because the company you work for isn't doing so well, and you're going to lose your job. Obviously, Graham is pretty financially secure, but that is something to consider. Generally, the advice I've seen, and I tend to agree with it, is that you shouldn't be invested too much in the company you work for, just because there's so much concentration risk. But if you remember from the interview he did with Kevin O'Leary, one thing Graham has a problem with, it seems, is being too concentrated. I mean, he was way into California real estate, and only recently you're seeing he actually was in the stock market, outside of ETFs and index funds.
It just makes sense that I would reinvest some of the money that I make here back into the stock of.
You can see that. He's got $182,000 in Google. That is insane. That's actually almost the size of his Tesla position, believe it or not. But which one gets more attention? Obviously, it's his Tesla position. I think proportionally, just based on the cash he's using, he believes more in Google than Tesla. He put more money into his cost basis on Google. Yeah, you can see it right here. His cost basis on Tesla is smaller than his cost basis on Google. Interesting. He believes more in Google than Tesla, if I had to guess. Facebook too. He likes his tech. That's interesting. One thing you can see down there at the very, very bottom on his video is there's Corsair stock. I've been telling you guys about that company. Graham Stephan likes it too.
Google. Over the last year, that investment has made me about a 45% ROI. Then my fourth largest holding on here is a company called Enphase, and they specialize in solar energy.
Yeah, Enphase. I had that company a while back. I actually did pretty well on it. I think I made something like 60%. I'm not so sure about solar panels. I watched a documentary called Planet of the Humans. I don't quite know what to think about it. I will say though, again, Graham has a concentration problem. You've seen Kevin O'Leary tell him this too. Most of his portfolio is staked up in companies where they're reliant on alternatives. I think, again, if you see a rebound in oil, you see a rebound in fossil fuel usage, or green energy fails, right? For example, there was a fad in green energy during the Carter administration in the 70s, and look what happened after. Afterwards was the Reagan shale oil boom and fracking boom, right? So green energy comes and goes in decades. I'm not saying it will necessarily happen this time, but a lot of Graham's portfolio is really, really into green energy, and yeah, it's risky. It's risky because there's so many people chasing smaller and smaller yields. Everybody thinks green energy is going to be the future. Well, what if they're wrong? Everyone's betting the same way. That means the alternative bet actually has really good potential returns.
And as it turns out, there was an article that came out from a short seller alleging mass fraud within the company and how they falsified revenues. Obviously, that was a very huge accusation, so I wanted to look into it further, and the more I started researching this, the more it came to light that the same company said the same thing a year ago. Well, they shorted the stock and took massive profits the entire way down. So I felt like this sell-off was...
Number one way I actually recommend to learn about investing in stocks and finding good individual companies is read short sellers, obviously learn how to debunk them or learn what they get right. And if you think like a short seller but use that thinking to find long stocks that you're going to hold for a long time, you can do quite well, and I think most YouTubers don't talk about this.
And since then, I've just continued buying in because I really believe they're a great solar company with a lot of innovative technology. Right now, that investment is up about 74% in...
Interesting. So we have a $79,000 cost basis. It's $136,000 now. Again, all I'm saying is, Enphase, there's a lot of great sentiment. Most people like that company, but things turn around and green energy stops getting the subsidies, or there's a change in administration like you saw between Carter and Reagan, for example. This can turn around.
Then after that, we've got somewhat of a controversial one here, and that would be Boeing. But during the middle of a shutdown, I felt like it was very unlikely they would actually go under.
Yeah, so about Boeing, and this is one thing we see, is that airline companies, especially major defense contractors, major producers like Boeing, they're just always going to get a bailout. Usually the policy in the West is if you have a major industry in a country that employs so many people, it's developing all the latest cutting edge technology, if they ever fail, there will just be a taxpayer bailout. So he's right on that calculation. It's interesting here, he invested $80,000. He really believes in Boeing, doesn't he? It's actually not one of his biggest gainers though. That position relative to the other ones he was buying in underperformed.
Plus, back then, that worked out to a 6% dividend yield, which is insane for a stock that was normally trading at almost $400 a share. And finally, for this category...
Interesting, there's another example. He's getting a 6% dividend yield, 6% yield on cost on his Boeing shares. If I had to guess, if you only look at his dividend payers, his probably average dividend yield across his portfolio is in the 6%, 5 to 6% range. Really good job. Try getting 5% on anything now in these days. The interest rates are always near zero.
We have number 5, and that would be Facebook. Now, here's a fun fact, but before Facebook went public in 2012, when I was working as a real estate agent, I sold a house to one of the early members of the Facebook team. And as that deal was closing, he offered to pay all of our commissions in Facebook stock at their IPO price of $35.
I've read many books about the foundings of Facebook, and they were just handing out stock like candy. It really was interesting. I think they gave out like 0.5% or 0.1% to an artist who painted the wall in one of their original offices. Most time, investors and companies either want to sell their stock fast or they don't want to get rid of it because they think their stock's going to go up a lot. So usually actually people take it as a bad sign because they're thinking, well, if you really believe in this company, you'd be giving me cash, which doesn't appreciate in value. You'd be keeping as much of your stock to yourself. But hey, it looks like it would have paid off.
A share. I thought about that very seriously, but instead I decided to use that cash to go and buy my first rental property back at the very bottom of the real estate market. Now,
if someone were presented with this position, right, or if they were saying, hey, look, you don't have any money and I'm just going to give you stock. I think most people, if they're just starting out, they'd rather take the money because you need money to make money, right? I think these days, though, Graham, he's not exactly cash poor. If I had to guess, I think Graham would take the stock option if he had the same deal presented now. But as he said, he had that Facebook stock offered to him just when he was starting out. I actually was in a very similar position to Graham once upon a time. I built a small company and I was approached for a buyout offer. And my first instinct was I wanted to take up cash, all cash up front. But obviously the person working with me could not afford to buy out the entire business in cash. So they offered me stock in a private company. And eventually we worked it out, and the arrangement we came to was that it would be half stock and half cash. And I was perfectly happy to take that deal. So maybe that's something Graham could have considered. He could have taken half Facebook stock and half cash. But for me, I don't know, maybe it's the novelty factor. I actually would almost always rather take private stock than actually cash if I'm buying something. But again, I'm not in the same position as someone who's just starting out investing. For me, it's more interesting and I think more potentially rewarding to be in private stock. So if it were me, I would have taken all Facebook stock.
Now today, yes, that Facebook stock actually would have been worth way more than that rental property, but if it wasn't for me buying that rental property, I'm not sure I would even be here today. So now I use some of my rental property proceeds to go and buy Facebook stock, and that way it all just comes full circle.
There's a big difference between Facebook 10 years ago and Facebook today, though.
Plus, they also own Instagram, WhatsApp, Oculus VR, and pretty much all of your data ever on the internet, for better or for worse.
Scary,
to me,
isn't it?
they've proven to be a resilient company with the expectation that they want to continue expanding, and so far my position in this is up about 20%.
Yeah, Facebook's probably not going anywhere. They have some competition, obviously. Oculus is not dominating VR. I think most people prefer the HTC Vive. WhatsApp is definitely under attack by Telegram. That's obviously the superior app. And I don't know who's using Facebook anymore. Instagram, though, I will say, is going strong.
But when it comes to all of this, though, I think it might be really fun to have two more categories. The first one would be the riskiest stocks that I'm buying into, and the second would be the stocks that I have lost the most amount of money on.
The riskiest stocks? I thought that hydrogen company was the riskiest one. I can't believe there are more risky ones. Graham doesn't strike me as a risky investor.
So let's just get that out of the way.
At least he doesn't consider himself to be, though. I would consider that sort of concentration in green and alternative energy to be very risky, to be honest.
First,
in my opinion, oil is far from over.
In terms of my more, well, speculative investments, the first that comes to mind would be Fisker. This company was founded in...
I heard him talking about Fisker on one of his podcasts, and I have to admit, I was this close. I was so close to pulling the trigger on that one.
2007, and then shortly afterwards they came out with the infamous
You should listen to him on this. It's really interesting.
Fisker Karma, which at the time was a competitor towards Tesla. However, even though the car looked really cool, it was plagued by issues, and it would sometimes just burst into flames for apparently no reason at all. The company ended up shutting down shortly afterwards when their battery manufacturer filed for bankruptcy. But a few years later, they were purchased by another company, they were restructured as Fisker Automotive, and now they're making electric vehicles again. But let's make it very clear, there is a lot of competition right now in the EV space.
I would like to see Fisker carve out a space in the luxury EV market. I think Tesla's moving out of this with their focus on the Model 3. I think luxury EVs is a good place for Fisker. And if they really go into it, I would consider an investment in it.
Most of Wall Street just refers to this company as a bit of a lotto ticket in the sense that, yeah, it does look cheap when you compare it to Tesla, although it's a long shot if they're ever actually going to gain any significant market share. But ultimately, I felt like this would be a calculated risk for me in terms of my investment here. Then second,
so you look at it, his investment in Fisker is $30,000. His investment in Tesla and Facebook is only 3 times that, so he's putting a third of what he normally would put into Fisker, and that's something he considers a lottery ticket. I don't know, if I was buying into a lottery ticket, I probably would do a 10th the size of my normal position.
Then second, we have a company called Gevo. They're a renewable chemicals and biofuels company, and they make alternatives to petroleum-based products. This is a stock that I got into about $5 a share, and since then, it's more than doubled when it was announced that the CEO of Gevo would be the head of Joe Biden's science team. Now, right now, there's definitely some mixed thoughts on the company. On the one hand, there's not a lot of demand out there for liquid hydrocarbons. They also have very high overhead, and some of their new projects are not expected to generate any revenue for another few years. But on the other hand, if all of their plans pan out perfectly, it could end up making a lot of money.
Again with Graham, what if oil gets back into popularity? What if it just remains more economically viable to use oil rather than these alternatives? I think this would be a really interesting company if the United States had to go into autarky, if it was embargoed or it got into a trade war with oil producers and it needed these synthetic alternatives. I love the technology generally, I'm just not sure about it as an investment. That said though, he seems to think this is more about that this company's gonna get a ton of public money, and as we all know, Tesla got a bunch of public money, so yeah, I'm half-half on this one. Just generally though, this is again another example of Graham, man. I think oil is your worst enemy. If traditional energy comes back, you're gonna be in big trouble, or what if nuclear gains popularity? Then you're in trouble too. A lot of these green energy alternatives. Too much concentration risk, in my humble opinion.
Third, we have Blink Charging, which owns and operates charging stations throughout
Graham, all EV, all green energy. What if people say, hey, we like nuclear power? What if gasoline cars have another 10 years in them, right? So people thought GameStop was dead, and look, GameStop obviously has another decade in it. Be careful, man.
The company itself, in my opinion, is just a bit meh. There have been accusations with this that they're siphoning money from investors, that ground site visits.
So actually, this is interesting. So this looks like Graham is reading a short seller report. He reads a lot of short seller reports, and didn't I just say, I didn't even know he did this, didn't I just say the best way to learn about how to find good stocks, how to find big stocks is read short sellers all day. Read what the most pessimistic people are saying, and you'll learn how to find good companies, and you'll learn how to find information outside of the SEC filings.
Despite that though, I happened to buy in this investment right before the massive EV craze. So I'm just holding on to a relatively small investment here just to see what will happen.
Sell options against it, borrow against it, use margin to borrow against it. Yeah, if I had those kind of doubts, I would sell out of it. I think there are better opportunities out there.
The fourth, this one was probably a little less risky, but this was an investment that I made based on the infrastructure package that might happen. And that would be my investment in US Concrete Incorporated. This is a company that sells ready-mix concrete and
I don't know, I think the consensus on Wall Street is that the infrastructure package isn't really an infrastructure package. I mean, let's be honest, most of the US infrastructure is built in the 50s and 60s, and it really hasn't been touched since then. They talk about this every single presidential cycle. Oh, there's going to be an infrastructure rebuilding. Oh, we're finally going to rebuild our roads. I've yet to see it happen. I've been through so many presidents. I think that's just something the politicians say. There's always a set of promises they make every single time. Oh, we're going to end the wars. Oh, we're going to help you out on healthcare. Never happens. Because if you look at these steel and concrete companies, outside of the times when there's hype about a potential infrastructure package, if you remember, Trump promised the same thing. Oh, believe me, we're going to upgrade, rebuild the roads. They're going to be so beautiful. The price of steel, the steel companies, they went way up, and hey, nothing happened. The infrastructure wasn't rebuilt, and I don't know, I could see the same thing happening right now too. I mean, the same thing was promised in 2016, it's not happening. That said, whoever does actually know the time the government is going to do a major infrastructure rehaul and spend a bunch of money on concrete and steel, you will make a lot of money, probably. But that said, the stock prices of stocks like US Steel, concrete, if you look outside of the times where they have hype, those stock prices, those stock charts do not look good. I see a lot of pain in some of these charts.
If the infrastructure package is passed through, they might stand to benefit a lot from increased constructions to roads, highways, bridges, you name it.
Yeah, again, people said the same thing during the Trump presidency, and it didn't pan out.
As it stands right now in the proposal, roughly $621 billion would be allocated towards projects.
Emphasis, it's a proposal. It's a proposal.
Which would most likely use concrete. So at least over the next few years, I'm willing to take the risk on this just to see how this might play out, and worst case overall, it seems like a pretty stable company. But even though I have only named the winners so far, we should talk about some of the losers. Because I'll be honest, not everything I pick does well, and even during the massive bull market we've seen, it's impossible to have a few stocks which don't pan out, and for me, these are those stocks.
More YouTubers should talk about their biggest losers. It's easy if you buy 100 stocks and you only talk about your winners. That doesn't tell you so much. YouTubers should talk about their overall track record, their overall performance. Because you can yell out 100 different stocks and say, oh look, I picked this one, it was the best one. Yeah, but you don't talk about your 10 other losers.
Now, first of all, even though a few of these stocks were just out of my control, poor timing, a few of the other ones were flat out just stupid purchases, and I knew that going into it. The first one, Nokia, down 37%. Now,
he bought Nokia. Oh man, Graham, what are you doing? What are you doing? So he was paying attention to the GameStop hype, but he bought Nokia and not GameStop or AMC. Yeah, these people, they always buy the off-brands, right? So Bitcoin blows up, Ethereum blows up. All of a sudden there are people saying, oh, I've got no chance. The real opportunity is in these new ones. And they buy crazy things like Dogecoin. Graham. That's why Flying Kitty became a multi-millionaire and yeah, too many people bought Nokia. Let's hear what he has to say, though. We all make mistakes. Once upon a time, I bought a total scam Chinese company and lost 99%, literally 99%. So it's all fun and games. No serious shade thrown at Graham.
Compared to everything else, I didn't invest a lot of money in this stock, but I did throw $6,600 here just to be a part of the meme movement.
Okay, so he was just trying to... He probably was investing that to get his skin in the game so he can make videos about GameStop and Nokia. I understand that. Though I don't know why he's still holding. I mean, at this point.
Next, we have AI.
Yeah, he doesn't talk about it. He just says it's there. Why is it still sitting in his portfolio? I would just sell out of it.
E3, and this is my single biggest loser of a stock, not on purpose, and that is currently down 47%. Yikes. Going into it, I felt like artificial intelligence had a lot of potential, and this company seemed very promising for anyone looking to get into the space. But after buying it earlier this year, it just started going down as treasury yields began going up. That put a lot of selling pressure on the stock, and because this is a company...
Yeah, but so treasury yields have been going up, but you know, not every stock's going down. It's probably likely that this just isn't a good company. I mean, again, if you're interested in AI, Facebook, Google, I made a video actually about how to invest in AI and automation. You can look down in the description. There are a lot of companies, big mainstream companies, big names that are investing in AI, and you don't need to buy a company dedicated to it. I would trust a more established player like Google or Baidu or something like that to invest in AI than one of these startups. Even Tesla to a lesser extent.
Company that I really believed in, I just kept buying the dip. The problem though was that it just kept dipping and I kept buying. And before I knew it, I had $42,000 invested in a company that's now worth about half. Now, I'll admit, I still keep buying a little bit here and there as it's dropped, and I have no plan on selling. But this was a pretty bad loss that I still believe in, but only time will tell. After that, third, we have another meme stock, BlackBerry, and that's down 51%. This one I feel like is kind of cursed because literally the second I bought it, it started going down in value.
Why is he buying the phone ones? He's buying all the phone meme stocks. He wasn't buying the originals like GameStop and AMC. It's much easier to compete in retail, in my opinion, than phone manufacturing, so I wasn't so sure about Nokia or BlackBerry. GameStop had a lot better potential, in my opinion.
Lordstown Motors, down the most of anything in terms of a percentage, and that is down 55%. Now, they're an electric car manufacturer that went through a bit of a frenzy when it was announced that GM invested $75 million into the company. But it quickly became apparent that everyone just got ahead of themselves, and now they're facing a lawsuit claiming that they misled investors through its non-binding pre-orders, and the company was never on track to begin production within their time frame of September 2021. The whole thing here was a bit of a mess, but as you could see, again, relative to everything else, I didn't invest a lot of money in this. But still, being down 55% just is bad. But overall from this, as you could see from the actual dollar...
Interesting, here are his losers. He's only got 4 in a whole portfolio that looks pretty big, so, you know, that's a pretty good track record of picking long stocks. You only missed 4 out of, looks like he selected 30 plus. Good job, Graham.
Amount. I don't invest a lot of money in stocks I feel are...
And his losers, I gotta admit, outside of AI, which he probably was putting way too much into, outside of AI, he did a good job not putting too much money in the more risky stocks. So hey, good job, Graham.
And finally, when it comes to the stock market, I've always talked non-stop about the importance of diversification and not trying to time the market.
Yeah. I will admit, the last stocks I've seen are the opposite of what you're preaching. Well, let's see what he has to say.
Portion of this account is dedicated to a simple broad market
that's
ETF,
better.
and that would be SCHB.
That's much better.
This one covers the largest 2,500 publicly traded companies in the US with a really low expense ratio of just 0.03%. I've been buying this one.
Yeah, this probably does make up for his overconcentration in EV and alternative energy. That said, though, he obviously has hundreds of thousands of dollars on the line.
On here so I get more exposure to the stock markets beyond just the S&P 500, and I get more diversification across smaller and mid-cap stocks. Right now, this investment is worth a little bit over $1.5 million.
Okay, yeah, so it looks like he's half index funds, half ETFs, and then less than half of these individual stock picks. Interesting.
And it's my single largest holding in this account. I've been buying into this fund on almost a daily basis with no exception, no matter where the market is at, with the intention of holding this until...
This is good discipline. I will say one very good thing about Graham is he obviously has top tier, like we're talking athlete level financial discipline.
Retirement, which is basically never. I'm never going to retire. But prior to that, I was using Vanguard's VT Sachs fund, which I still have. But with this, I wanted to take a more broad approach with investing my money by putting it in as many different spots as possible, so this is where I decided to put it. This account also brings in $3,750 a month in
Whoa, 300, wow, over $3,500 a month just from dividends on a non-dividend ETF. That really is incredible. It's interesting what dividends do to your psychology. When you know you have money coming in, you don't have to worry about it.
dividend income, which is set to automatically reinvest so everything can continue growing. I'm definitely not an aggressive investor by any means, and I really take the
Man, looking at your individual stock pick, outside of these ETFs, you are an aggressive investor, I will say that.
approach that, hey, I probably can't time the market, so I'm not even going to try. So I really believe my time is best spent just buying companies that I use on a daily basis, that I believe in and want to hold long term, with a broad market ETF just serving as the foundation for the entire thing. So I hope this helps for anyone curious as to where I'm investing my money, and my goal with this account is to eventually get it to a point where it equals the amount that I have invested in real estate. That way I'm never—
That's much better. He obviously did take Kevin O'Leary's advice to heart. And he was overconcentrated in real estate, and looks like he's finally moving into stocks now, and good on him for diversifying. I'm the opposite. I need to get more into real estate.
Never going to be too reliant on one specific investment, and at this point in my life and career, I'm really about consistent, long-term, stable growth instead of trying to maximize the value of every dollar possible. In my opinion, long-term investing is absolutely vital, and it'll be really fun to look back at this a year from now and just see how everything has progressed. So if you want to see something like that in the—
Alright, yeah, so everyone has their own investing objectives. For me, because I'm semi-retired, I care more about monthly income, but also I have my expertise. I invest in my speculative biotech stocks. His perspective is different, and that's the number one important thing you need to take away from this video is that, number one, you have to, before you start, you need an investing philosophy. You ask, why am I investing? Why am I doing this? Some people, they need the income. Other people are doing other things. For Graham, he wants to be in the game for a long time. And in order to be in the game for a long time, you need to not get wiped out. As a result, his portfolio reflects this. You can tell a lot about a person, what they think, where they think the world is going, if you just look at their stock portfolio. Now, one thing which is really interesting, this is kind of behind the scenes, between the lines, there are a lot of stocks that appeared in this video that Graham didn't talk about, so we're going to look at those now. Alright, so look at these stocks here. We've got Wynn Resorts. That's obviously a coronavirus opening play. He thinks people are going to travel. And you look at that, there's $55,000 he's got invested in there. Denny's, which is interesting too. I'd like to hear the explanation on that. Dropbox, if I had to guess, he was invested in that because he thinks that people are going to be operating more online, doing more online meetings, online work. It makes sense. Booking Holdings. Now, this is an interesting one too. This is a coronavirus opening play if I had to guess, but let's take a look at it right now. Yeah, so this is a travel technology company. So if I had to guess, Graham was talking about in this video stocks he was thinking about last year, and he didn't so much talk about his stocks looking forward. Based on what I'm seeing, I think he thinks travel is going to blow up and that these travel companies are going to make a lot of money. And I'm inclined to agree. I think there's so much pent-up travel demand, it's going to be insane. But the real kicker is you need to pick the countries that people are actually going to want to travel to. And there's a few I know that, for example, that there was so much hype and so much demand to travel to. And I'm going to be investing in those. So you see what I mean. Here you can see he's got Airbnb, he's got Alaska Air, and then Activision Blizzard. I think Graham is investing for the future, looking towards, again, travel having a huge boom in 2021. It's interesting he's not talking about that in the video, because he's not talking about what his forward-looking investments are. He's only talking about what he was thinking in the past last year. I mean, by now that information's outdated. And I was inclined to agree. I'm actually looking to buy certain airlines because I know certain countries are just going to blow up in popularity to travel to. Really interesting that he's putting so much money into travel and not talking about it in the video. Alright, that's all for this video. If you want your investing portfolio reviewed similar to this video or the videos I did before, links down in the description. Send me a DM on Twitter or email me at eugenechargreen@protonmail.com. I'll take a look at your stocks and tell you what I think. This has been my reaction to Graham Stephan's investing portfolio. All in all, I think he does a good job. He's one of the better investors, I actually think, despite not being a stock market guy on YouTube. He has the most sanity, I will say that. Though by my standards, there's still probably not enough sanity in this portfolio. But overall, if I had to give this portfolio a rating, I give it a B. I give it a B. Simply, though, because of his index picks, and I can't argue with the results. Gonna get out of here really fast. If you want to start investing yourself, there's links down in the description. If you're a beginner investor, check out my affiliate link to M1 Finance. That's the best brokerage for beginning investors. Intermediate investors, check out my link to Webull down in the description. If you use those links, I get a small kickback and it helps out the channel. Thanks for watching. Salute. See you next time.